Hello everyone and welcome to yet another video for Cryptopocalypse. Now, this is a follow-up to my video from last night when I was trading futures. Now we're looking at a Bitcoin chart. I am your host CR, and today we're going to be talking about risk to reward ratios and how I think that it's not really a thing in trading. Now, okay, you hear me out on this one, okay? I know exactly what's going on through your mind right now. Hear me out. Now, this is a very, very saturated topic. Everyone is talking about price action is king, this and that. Price action, bar replay. I'm not going to use that. Looking to the left of the chart and drawing in support and resistance levels. I'm not going to use that. First of all, Armageddon. This toned down version is available now. You can get it by refreshing your chart and it'll show up. It has automatic bearish and bullish setups for our punch out strategy now, and so we're going to be focusing on that. We have a punch out setup right here. It's a 15-minute time frame intraday, and right off the bat we can see that we close here below the 1.5, but to make it fair, let's say you're late and your entry is somewhere over here and you're just trading the punch out strategy. Your stop is placed at 0 minus 0.5, or it would actually be placed at this previous stop right here. Why are we not placing our stop loss at minus 0.5 as per the strategy? There's lots of nuances here, right? But it is logical that the highs are not as extreme, and it is entirely possible that sometimes price can go tap those levels before reversing because there's liquidity there. I don't want to say those words anymore. Liquidity zones, it doesn't matter. We all act like experts. We all act like we know what the we're talking about, but in reality you have to realize that trading is not as is being depicted on social media and classical textbooks. All right, the market landscape has changed. So with MarketSpy here, we have punch out to the downside. All right, so first of all, this chart is set to your default support and resistance levels, which to me are simply magnets. They're not really support levels, but it's set to weekly. Right, we're trading through the week, intraday, 7 days, so I have my weekly support and resistance levels. Because think about it, the week has started Monday, right? You print your weekly levels. What are the chances of price actually making a new weekly high or low within a space of 2-3 days? Unless something extreme happens, you're going to be chopping up and down. And so this white line here is our pivot, and this green line here is our support weekly, right? And this red line here is our resistance. So below pivot, price is below pivot, chances are it's being magnetized towards the next level here, measured 1-to-1. Price is above that pivot level, chances are it's being magnetized up to this level, if the slope is bullish and baselines, you know, the rest of it. Over here though, we close below the value line, right? And we're going on discount. We know what to expect, price falls. But here's your punch out setup. Now if you measure this thing over here, and most people on social media and elsewhere, they would go to like the extremes of the highs and the lows, and they'd be like, look at that 5% dump. They don't care about the day open of the traditional markets, none of that. They just go because it's more, you can upsell whatever it is that you're selling by saying that, look, right? Well, let's be realistic here. Punch out. This is how we start our conversation. Realistic entries around here. Yeah, it's around here, and your mind is racing. You're thinking, what if there's stop losses here? What if it touches that and bounces back up? Not likely. If you want to know why, we should talk about this in our Discord. All right, all the little details. We should set up a live stream. It's just that I'm not getting any requests, and so I assume that most of you guys already know what you're doing. You've been around for 3 years, and newer people coming in, they're not asking me any questions. So, but for the rest of you guys who are part of our community trading this, I want you to understand something about Punchout here. Risk to reward ratio, as I mentioned, is drawn from our entry, realistic entry from here, stop loss over here. Look at the distance, right? Don't look at the risk to reward ratio as in 1 to 1, 1 to 2, 1 to 3. Look at it as 0 to 1, 0 to -1. Okay, think of it this way, because this decides how many contracts you're going to be able to deploy on this move. Now, because this signal is late and we're trading strategically according to the strategy, so we're very realistic about this, right? Your number of contracts that you're allowed to trade here, you know, if you use Poet, our trading terminal, it's very easy to calculate, and it'll just give you the number so that you never ever get wrecked. Okay, but let's say you enter here. Why am I exiting over here? Weekly support, right? It's a magnet zone. I don't know if price is going to bounce on it or not, but I think that it will. So it's a sign of resistance, because there's nothing else. There's no other resistance periods, zones, nothing down below. I'm not looking to the left over here to play tricks with your mind. Look how far back. Forget all this bull, right? I'm sorry, I have to call it how it is, but here's your level. You're exiting here. You're taking profit here. Now, if you take it partially, 90%, let the 10% run further down, sure. What if, do you wait for the 10% to get stopped out over here if price continues to go up here and then knock you out? No, 10% should always be exited on the baseline reclaim and the strengthening of momentum. Simple as that. So this price, remember, price is just a moving average. It's a line that crosses another line. This is a true cross that you should be concerned about versus moving averages crossing one another. You're concerned about price crossing a key moving average. In our case, it's set up to be baseline 1, tuned to support a wide range of markets. All right, tuned to accommodate our strategies. There's no secret sauce here. All right, we cross over that moving average here. Okay, and this is where you exit your runner, your 10% runner. Now, this is a brand new setup. We dumped, we bounced off of support, it appears. And to confirm that we actually did bounce, we were held by this baseline 1. And when these diamonds were here, when they disappear, these are points of the baseline retest. This is considered a valid retest. This is your window to get in. When you see a diamond, your potential risk to reward outcome is diminished, right? You're not maximizing your potential here. It's called a baseline train, choo-choo train. Remember, guys, we talked about this. And when they start printing, it's already too late, and you're not allowed to be entering here, or here until the diamonds disappear. Technically, MarketSpy is proving the argument that you had your entries down here at the pyramid once, down here at this red candle twice, and the rest you held on for profit. However, it's uncertain if price was going to go up. So what do we do in this case? Momentum is supporting the theory that it will continue, okay? Let's wait for our punch out strategy. Strategy number 1. So Jackrabbit entry 1, market enemy type 1 signal. Nope, 0, no chance, right? Why? Because we already dumped. Market enemy is to catch on wicks, a knife catching strategy. Over here we have a scalping strategy, quick in and out, good to go, right? But you scalps, remember we talked about this, turn into swings. Swings turn into scalps. You have to be ready for both. But regardless, once you have some directionality, you can then take it from there. So here, bullish punch out again, confirmation, right? You need confluence. Here it is. Notice the risk to reward ratio is exactly the same. Is exactly the same, 1 to 1. Your risk is bigger here, and when we say bigger, that means you're allowed to size up more than you would be here. All right, so when we say risk is small, that means the entry and the stop loss are wide apart, like this over here. So the risk is small, means that it's tighter. Risk is big. It doesn't mean that you're risking a lot. Big means there's a big distance between entry. So the actual profit potential is smaller. You're gonna earn less because one, you're late. Two, the stop is too far away from your entry point. Sure, you could have placed a stop over here and maximized it, but that's not part of our strategies. This is MarketSpy. Remember, we're not talking about general trading. This is inside strategies of MarketSpy. Exclusive, one of a kind, nowhere to be found, just here on this channel, right? And you have your target potential here. Risk is small, which is good. Risk is big, which is bad. But in terms of losses, it's all the same. So you size up and your number of contracts here is bigger than it was here. Does that make sense? Because your stop is here, your contract size increases. Because if this price falls and stops you out, then you lose the equivalent of 1%. Let's say you're always risking 1% here, 1% here. And so my argument here is that when people present these risk to reward things, you're always visually, not you specifically, I know who's watching, but beginners get deceived by seeing this kind of nonsense. They're like, look at our entry, look at this. There's no consistency in that. That's rare. Usually it's something like this, and this is the reality of it. 5%, 2% rise, profit. You actually made more money here than here because of how early you were able to get in here versus how early you were able to get in here. In both cases, you're late from the extreme lows. Yesterday's video teaches you how to get entries earlier, but in terms of the punch out strategy here, 1.5 level, we have a candle close right here. This little, can't even see it. This guy right here. Okay, it closed above that level. You have a flag. You get an entry. Everything looks good on momentum. Don't worry about these crossovers. Remember, we are entering on these flags to continue. And you hit your target at 1R. Okay. Now this is a void area, void candles. So you're okay, you can hold it. Here's your 23 fib daily level. We just touched this, so you could have gone and attached your risk to reward profile to like over here to extend it. But all I'm trying to say here is that I don't believe in risk to reward ratios. I don't believe in hit rate, win rate ratios, right? None of that matters to me. All I'm thinking about is, what am I going to lose if my stop gets triggered? That's all. And also, if I don't have a hard stop, this is simply being used as a measurement method to put my stop loss here in my mind so I can size up a decent amount of contracts. So if I don't have a hard stop here and price continues to fall lower, I might lose more than 1% of my account. Let it be 2, 1.5 if it continues to fall, and I can exit that manually. So of course this is an intraday setup, so I'm monitoring it. If you're away from the charts, put a stop loss. Very interesting, deep observations on charts that I want you to play with in your mind. All right, I want you to play with these concepts, with this understanding of what is happening. What you're seeing here is one and the same, but visually it looks deceiving. It looks like this may be better. All right, for you beginners out there, you might think so in my last night's video, I talked about how we had that pop, right? That breakout, punch out. Same thing again happening today. And I told you that that was the equivalent of a choppy range, because if you're able to get into a choppy range and put your stop loss properly, then you're always risking the same amount, but your reward is, how long do you hold? Like, where are you holding this to? I gave you a tip yesterday that you hold this until you lose the baseline. True? So punch out over here, you wanted to go long, it never closed about 0.5, lost the baseline. You could have gone short right here. You don't have to wait for the punch out setup to print. You could have gone short right here. If price was to reclaim the baseline, close above it, you would have exited that. So this trade right here, if you have a position open, you should let it run to some extreme levels. So for example, pivot, the 38 fib, the value line, or maybe the 61 Fibonacci extension here on the daily pivot. Once you cross this baseline, which will happen somewhere around here when price is over here, most likely, you will exit your position. Essentially, your entrance is somewhere down here, and you're exiting your trade once you see the opposite of this setup developing. And don't worry, it's not going to be just one candle. It's going to give you plenty of time, plenty of little choppy candles like this to show you that we're losing momentum strength and it's time to go short or exit your position and wait for momentum to reset. I'd like to do a session on Punchout in depth in our Discord, so if you're interested right now, leave a comment below this video. I'm going to stop the video right now because I feel like there's no point of talking about the same thing over and over again. But if you want to get in depth about these strategies, let me know. I will not be publishing any guides or tutorials of how to use MS, but I will teach you how to interpret that privately, one-on-one in our Discord. Okay, this is my preferred way of retaining this alpha and giving you some really good tips and tricks here so you can implement that into your trading system alongside with MarketSpy. I just don't know where to begin. I'm not a YouTuber that goes on and writes scripts and tries to impress you with edited footage and graphics and all that stuff. I am here to build real human connections with real traders. And so if you want to talk about this, let's talk about it, right? Join the Discord. Let's schedule a call as a community, all of us together, and then we'll talk about it. But essentially, Punchout is an amazing strategy that is exclusive to MarketSpy. And it uses some very interesting concepts and techniques here to give you really good opportunities to go short or long at any given time throughout the day. And honestly, if we just turn this off and look at this price action, you wouldn't know what to do. Don't trick yourself by saying that, hey, this was support, this was resistance. That it doesn't exist. Okay, it's all in your mind. It's all shared knowledge that's been distributed, picked up, and there's an agenda. There's a global agenda, and traders fall for it, right? Stop putting price on a pedestal saying that it is king. It is not king. It is being manipulated by algorithms 24/7. Price is not king. Price is a jester. Remember that. Only a system can give you trade setups like these. Nothing else. You have a choice. Spend 5 years developing one, or you can come to me, ask me a few questions about MarketSpy, let it click in your brain and start acting on it, because I guarantee it, you will find success if that's what you're looking for. Until then, my friends, I will be sharing these little videos and post one tomorrow for our Bitcoin analysis on the macro side of things. And yeah, we'll take it from there, one trade at a time. Thank you so much, and please leave a comment below if you'd like me to get into more advanced, in-depth strategies. I still have a lot that I want to share with you that is not regurgitated content from whatever's out there. And so if you want to hear my thoughts on this, yeah, leave a comment down in the description, in the comment box. And then check out the Andal app that I'm sharing for a free 14-day trial. It's going to play some lullabies in the background for you to trade alongside to some tunes to relax. Yeah, and that's it. Thank you so much. See you guys later. Risk to reward ratios, they don't mean jack. It's all about where your entry is, where your exit is, where your stop is. That's it. To have the balls to say that price, according to your belief, is going to do this is insane. All I can tell you is that when it happens, when this actually happens, it'll be one of your best trades, but you weren't planning on it. Okay? You'll look back and you'll say, yeah, I wasn't really holding it all the way to here, but hey, that baseline, we never lost it. We never lost momentum, and so I held until we did. And this could go on, and until that happens, until you get that exit signal on your system, that's how you achieve these kind of risk to reward ratios. Most other times, you're going 1-to-1 consistently so that you don't get wrecked. All right? Most other times, these are your trades. And this equals to this, but this made more money than this. I want you to think about that. That's it. That's your exercise for today. See you later, guys.